Good day, everyone. You're welcome to today's live stream. If you can hear me, if you can hear me, please drop a comment. Thanks for joining. Can you hear me? Can you hear me? Please confirm you can hear me. Also confirm you can see my screen. You're welcome. You're welcome. You're welcome. How's been trading? How's it been? How's it been? I hope you're making profits. I hope it's been profitable. If you can hear me loud and clear, I'd like to know. If you have any question, any pair you'd want me to analyze, let me know in the comment section. Let me know in the comment section. If you have any question or any pair you want me to analyze, let me know in the comment section. Please confirm you can hear me loud and clear. Also confirm you can see my screen. You are welcome. I'm waiting for your response. I need to be sure you can hear me and you can also see my screen. Waiting for your response. I'm seeing some nice setup. I'm seeing some nice setup on GU and EU. GU, EU, even on almost all the major pairs, I can see some nice setup. I can see some nice setup. Okay, so let's start the class. I want to believe you all can hear me. So we'll start by looking at the fundamentals. I don't think there are any major news today. I don't think. Okay, today is Tuesday, September 9th. There are no major news. Okay, we are not expecting any news today. And days like this, sometimes the market will just range. We shouldn't expect much volatility. You know, in days where there are no major news, most times market doesn't really move much. Okay, the volatility is very low. So um, let's go to the charts. So let's start by looking at DXY, dollar index. Dollar index, as we can see here. Let's start with the daily time frame. Let's start with the daily time frame. Good morning, Mr. Sam. William, good morning. Okay, if you have any pair you want me to analyze, any question, let me know in the comment section. Now, let's start with the daily time frame on DXY. I think DXY yesterday candle closed strongly bullish. It was strong, sorry, bearish. Dollar was strongly bearish. I can see what played out yesterday. The liquidity selling at the low of Friday candle. Mr. Deva, good morning. So they've swept the liquidity residing at the low of last week. Yeah, that was the low for last week. That liquidity has swept, and also price is currently at a premium area. If we apply our Fibonacci from this swing low to this swing high, you can see we should be looking for buys on dollar today. Okay, going by the pattern or the structure we have on the daily time frame, I think it will be best to go for sales. This would have been the best entry for sell after the formation of this candle, this bearish candle. That would have been the right time to sell. If you didn't sell from this point, you shouldn't be selling from this point. Okay, if you want to sell, you should be considering selling after price pulls back to fill this fair value gap. If you know how price moves from external range liquidity, it goes for external range liquidity, then goes back to fill the internal range liquidity, fair value gap. So what played out yesterday, they've swept the liquidity. You can see the liquidity residing at this low has been swept. Also, the liquidity that was the low of last week, the liquidity that was residing there has been swept. So we should expect price to pull back to fill an imbalance before we consider selling. Selling from the current market price for me is at a very high risk. So I will be looking for buys on USD JPY. Sorry, dollar index, I'll be looking for buy. So let's go down to 4 hours. So on 4 hour, I'll be looking out for a bullish reversal pattern on 4 hour. That's what I'll be looking out for. Once I'm able to identify a bullish reversal pattern on 4 hour, I would go bullish on dollar index. Let's have on 4 hour. This is a bullish reversal pattern. Do not confirm yet on 4 hour. It is not confirmed yet on 4 hour. You can see we had a spinning top, a spinning bottom, and also we had an hammer. Okay, so if a bullish candle closes after, that is if the next is not confirmed yet on 4 hours. So we need to wait for the current 4 hour candle to close bullish. Okay, we need to wait for the current 4 hour candle to close bullish for us to buy dollar index. Okay, now let's see what we have on 1 hour. So on 1 hour, okay, so we have what looks like a engulfing pattern here. You can see this candle closed above first, it was above this resistance, and it's also closed above this high. And I think after this move, this should be an impulse move on 15 minutes. Let's see. That's an impulse move on 15 minutes. This was an impulse move on 15 minutes. And after this impulse move, price is expected to pull back to a discount area. So if we apply our Fibonacci from this swing low to this swing high, price is currently at a discount area. So all we need to wait for is the bullish reversal pattern to form. That's all we need to wait for before we buy. And also at this discount, we have fair value gaps I believe price wants to fill. We have this fair value gap here. Okay, so this will be a very good area to consider buying. This is where I'll be looking for buys on dollar index. Okay, I'd like to see price fill this fair value gap before going bullish on dollar index. So that's my take on dollar index. I am bullish on dollar today. I am bullish on dollar today. Mr. Isaiah, good morning. If you have any question, any pair you want me to analyze, let me know in the comment section. Let me know in the comment section. If you have any pair you want me to analyze, let me know. So that's my take on DXY. I'm bullish. But we need to wait for a bullish reversal pattern to form after price fills this fair value gap before going bullish on dollar index. So let's look at yen. Yen has been bullish. I've made money buying yen. I've made money buying yen today. I've closed 70% of the profit I made buying yen. I executed the trade yesterday. I sold GBP yen and 80 pips this morning on GBP JPY. So as you can see, yen is still bullish at the moment. It is still bullish at the moment. You can't sell yen now. Yen is bullish at the moment. You can see what happened yesterday. The first thing they did, I said it, they're going to come fill. There was a fair value gap here on a lower time frame. Let's see for our price came to fill that gap. I think that was what played out yesterday. Let's see for our. So you can see all these fair value gaps that was created here. I think that was what price filled yesterday. Let's see. I think this was the reason for the retracement. They filled that gap. You can see that gap, though they didn't fill it completely. They didn't fill the gap completely, but price entered into that zone. You can see swept the liquidity residing at this low. Then from there, you can see after price filled the fair value gap, you can see we had an inverted hammer here. This is the reason for the buy, you can see. And now it has swept liquidity residing at this high. So if you had bought yen, at this point, you should be thinking of exiting your trade. Yes, because it has fed buy side liquidity. And after sweeping an external range liquidity, it is likely going to come back to fill an internal range liquidity. That's what is going to play out. So if you have any trade on yen now, okay, if you bought yen or you're currently holding a trade on yen, you should be thinking of exiting at least 70% of whatever profit you've made. You should close it. You should close it 70% because external liquidity has been swept. So we could see retracement from that. Okay, so we have, let me go to 1 hour to identify the fair value gaps on 1 hour. So yen could retrace back to this. Okay, so we have this fair value gap. We also have this fair value gap. Yen might pull back to this area. So by now you should exit your trade if you bought yen. So that's my take on yen. Yen is still bullish at the moment. We cannot sell until a bearish reversal pattern forms on 4-hour time frame or daily time frame. 4-hour time frame or daily time frame. If a bearish reversal pattern does not form on a 4-hour time frame, we don't sell. We don't sell. Okay, we don't sell. So it's still bullish at the moment. It's still bullish at the moment. Okay. So let's look at Euro USD. EU and GU, that's from Noel, and from Isaiah, Euro, Australian dollar. Okay, so let's look at EU. Okay, so Euro USD, this is daily time frame. I think Euro USD is at a premium area now. So at premium, we do not buy at premium. We do not buy at premium. So based on that, my bias is bearish on Euro USD today. I can't buy at a premium price. Okay, I can't buy at a premium price. So I am looking for opportunity to sell. Even if Euro USD will do 1,000 pips from the current market price, I would not buy. I would not buy. If I want to risk buying Euro USD, I would love to see price retrace back to fill this fair value gap. That is where I would consider taking a risk to buy Euro USD, but I can't buy from the current market price because from this point to this point is about 100 pips, so I cannot buy from this point. So if you're trading resistance and support, there was a breakout from this supply zone, yeah, this resistance zone. We had a breakout from that zone, and after a breakout, price is expected to retrace back to retest that zone. So this is where I would be considering, taking a risk if I want to buy. So I can't buy from the current market price. So my bias on EU today is bearish. My bias on EU today is bearish. Okay, so you can see the pattern we have on 4-hour. You can see this pattern we had on 4-hour. You can see we had a spinning top. The next candle, I think it was last candle for yesterday market. Yeah, this was the last candle. First thing they did this morning was to sweep liquidity residing at this previous high. They swept the liquidity residing at the high of yesterday. Okay, so I think we had a fair value gap here too, right? Yeah, we had a fair value gap here, and that's the reason for the retracement we are seeing in the market. Now you can see there was a fair value gap here. Price pulled back, filled that fair value gap, and there's a rejection from that area. There's a rejection from that area. Okay, but since my bias for EU is bearish, I think after the formation of this candlestick, this pattern, I think a fair value gap was created in a lower time frame, which could also be the reason you can see the fair value gap on. You can see this fair value gap, and you can see also on 1-hour time frame that shifting market structure has occurred. Right, shifting market structure has occurred, so you can see this fair value gap. So you should be looking for sales after this fair value gap gets filled. This is where you should be looking for sales. Wait for a bearish reversal pattern to form on 1 hour or 15 minutes time frame before you sell. That's my take. You can see the shifting market structure has occurred here. There was a sweep of liquidity here, then price, broke out from this higher low. You can see price broke out, and after breakout from the higher low, the most recent higher low, you expect price to pull back to fill the fair value gap it created before the shifting market structure. So you can see the reason for my bearish bias on Euro USD. So wait for a bearish reversal pattern to form. You cannot jump in and start selling now. You need to ensure that a bearish reversal pattern forms on a lower time frame before you sell. That's my take on Euro USD. Patiently wait for a bearish reversal pattern to form before you sell. Now, if you insist that you want to sell now, there is nothing wrong. You can take a sell, okay? Because price can just decide to start dropping from the current market price and just keep dropping. So if you don't want to miss the move, I always advise that you take some partial entry. Partial entry, you could risk 20 to 30% of your maximum daily drawdown from this point. You sell from this point, and once you see your pattern, you add more to the trades. Okay, you add more to the trade so that you don't miss the move. So you set your stop loss. You could set your stop loss maybe 20 pips above the highs of this candle, because these highs can also be used as liquidity. These highs can also be used as liquidity. So I always advise set your stop loss 20 pips above the high of this candle. Now, if you take this trade now and you set your stop loss 20 pips above this level, your stop loss will be at 1.1797, 1.1797 from 1.1767. That's about 30 pips, 30 pips on risk. That's the market risk. If that risk is too high for you, then you have to wait for price to fill, wait for your bearish reversal pattern to form before you take the trade. Personally, I'm going to take a trade on Euro USD. I'm going to sell from this point, set my stop loss few pips above this level. Once I see my pattern, I go in with more trades. I execute more trades. Okay, so that's my take on EU. I am bearish on EU today. I am bearish on EU today. So let's see. EU is likely. Okay, so EU is likely going to come. Let me slice that too much. EU most likely, I think we have a fair value gap here on EU. It's likely going to come fill this gap. It's likely going to come and fill this gap. That's my expectation on, and that's a discount area. Let's apply Fibonacci from this swing low to this swing high. That's a discount area. So I'd love to see EU pull back to this zone. So this will be my target for EU. This will be my target for EU. This will be my target for EU. That's about 140 now. From this point, 1.1765 to 1.1720. That's about 40 pips, 40 pips or 45 pips. So my target will be 50 pips on Euro USD. We're expecting major news tomorrow. Tomorrow is core PPI will be released tomorrow, and on Thursday we have core CPI will be released. Okay, core CPI will be released on Thursday, PPI on Wednesday. Okay, so don't be surprised if market isn't volatile today. Don't be surprised. It's because of the news. Price might just even go into a range today. It might just range because of the major news that will be released tomorrow and on Wednesday. But like I've always said, do not be scared of the news. Okay, if you're a technical trader, once you see your setup on the chart, execute the trade, set your stop loss, and your take profit. Okay. So let's see GBP USD. GBP USD daily. Whoa. GBP USD, as you can see, it's been bullish. GBP USD has been bullish. It's been bullish. So now we have this fair value gap here. GBP USD might want to fill this gap, but I feel before it will fill that gap, it should do a little retracement. Okay, to do a little retracement. It's likely going to come and fill. This could be the next draw on liquidity on GBP USD. But personally, I can't buy GBP USD from the current market price. This is where I should have bought. So if I didn't buy from here, I can't buy from this point. I can never take a buy. Even if it would do 1,000 pips from the current market price, I can't buy. I would love to see price retrace. Okay, I would love to see price retrace. So on 4-hour, we had a spinning top on 4-hour time frame. Market has swept the liquidity residing at this high. Okay, market has swept that liquidity. So let's see what's happening on a lower time frame. This is a sell setup. This is a sell setup. There is a smart money divergence on GBP USD and Euro USD. You can see that on GBP USD, the liquidity residing at the high was swept. On Euro USD, what we have is mitigation. Price was mitigated on Euro USD. On GBP USD, price swept the liquidity. You can see that. That's smart money divergence. Okay, let's go down to 1 hour. Let's see what's happening. Okay, so you can see that's smart money divergence. That's smart money divergence. So on 1 hour, liquidity has been swept here. So let's go down to 15 minutes. We're able to identify a bearish reversal pattern. Yeah, let's wait for this 15 minutes candle to close. If it closes bearish, you could start selling. If the current 15 minutes candle closes bearish, that will be the right time to sell. That will be the right time to sell. And if you are selling, your stop loss should be at least 20 pips above the high of the candle. At least 20 pips above the high of the candle. Let's see 5 minutes. Okay, so you can see we have a shooting star on 5 minutes. You can see we have a shooting star on 5 minutes and a fair value gap was created there. So you could also patiently wait, okay, for 15 minutes candle to close below this fair value gap it created. You can see there's a little rejection from this fair value gap here. So you could patiently wait for the 15 minutes candle to close below this fair value gap it has created here. If 15 minutes candle closes below this area, that would be a good time to sell. That would be a good time to sell. Nothing will stop me from selling GBP USD. Nothing will stop me. Once 15 minutes candle goes below this fair value gap, that's a sell for me. So my bias for GBP USD is bearish. I am bearish on GBP USD. I am bearish on GBP USD. So I believe GBP USD is going to sweep all this liquidity. It's likely less upper our trend line, right? All these lows. I believe GBP USD will sweep all these lows before going bullish. That's my expectation on GB. All this liquidity it has created so far this week is going to sweep this liquidity before going bullish. Maybe tomorrow after the news release, dollar might lose strength. Dollar might lose strength. That's if the news is negative for the dollar, then we could look for buys on GBP USD, Euro USD. If the news comes out negative for the dollar tomorrow, we should look for buys. We should look for buys. If you have any pair you want me to analyze, let me know in the comment section. Okay, let me know in the comment section. Please give the video a thumbs up. Give it a thumbs up. Give the video a thumbs up. And if it's your first time joining the live stream, please do subscribe to the channel so that anytime I come on live, you get notified by YouTube. To subscribe to the channel if it's your first time. Thanks for joining. Okay, so let's look at Euro Aussie. Euro Aussie, those who sold Euro Aussie making a massive profits. They are in massive profits. Okay, so Euro Aussie is still bearish at the moment, but you cannot sell from the current market price. You cannot sell from the current market price. Though Euro USD is still bearish, you cannot sell from the current market price. This is where you should have started selling Euro Aussie. This is where you should have started selling. If you missed selling from this point, you had opportunity to sell here, though very risky. Selling at this point even is very risky. If you had missed this opportunity, you had another opportunity to sell here, okay? But taking this trade from this point is still very risky. But you could have also, sold from this area. So if you didn't sell from this point, look at the difference See how far price has gone. Why would you want to sell from this point when market is currently at a discount area? Swing low to swing high. So it will not be wise to sell from the current market price. It will not be wise to sell. You should be looking for buys on Euro Aussie. Okay, Euro Aussie might come to fail. You can see this fair value gap. This could be where Euro Aussie is heading to. See this fair value gap? That could be where Euro Aussie is heading to. Okay, but before you sell, you should wait for retracement. Wait for a retracement before you sell. Okay, so I think we had a fair value gap here. Was that gap filled? Let's see. Okay, that gap wasn't filled completely. You can see this fair value gap. So these are the areas you should look for your sell pattern. These are the areas you should look for sell pattern. Don't sell from the current market price. Wait for price to pull back at least to this area, these zones, okay, before you sell. Don't jump in and start selling from the current market price. You'll be taking a very high risk selling from the current market price. Don't do that. Don't do that. Don't do that. Don't sell. Which other pair do you want me to analyze? Let me know. Let me know in the comment section. Let's look at gold. Gold has been bullish, and I think gold has changed its trend. It has changed its direction. I think gold this morning was bearish. I think gold was bearish this morning. Let me see. Gold. I think it was bearish this morning. Oh, it has changed. Gold. Gold sold this morning, and now it has changed. You can see. So far it's been bullish today. It's been bullish today. Liquidity residing at the high of yesterday has been swept. But I personally won't buy gold from the current market price. I don't care where it's heading to. I cannot buy it. I've missed several opportunities to buy gold. So don't jump in from this point. If you buy gold now, it's due to FOMO. It's due to FOMO. Okay, it's due to FOMO. This is not the right time to buy gold. It's not the right time to buy gold. If you insist on buying gold, you should wait for price to pull back so you could apply your Fibonacci from this swing low to this swing high. Okay, wait for price to pull back to a discount area. These are areas you should be considering buying gold, not from the current market price. These are the areas you should be considering buying gold. You can't buy from the current market price. You know what you're doing in the markets, you can't buy. You cannot buy. So these are the areas you might want to risk buying gold. As far as I'm concerned, gold is overbought. Gold is overbought. It's overbought. So wait for a retracement before you buy. Wait for a retracement. So you could look for sales today on gold. You could look for sales today on gold. So you can see what we have on 1 hour. We had a doji at this point. We had a doji, a fair value gap was created here. We had this fair value gap is created here. Price has filled that gap, so you could wait for price to close below this gap. Okay, you could wait for price to close below that gap before selling. Okay, let's see 15 minutes. So you can see this is the reason for the retracement. You can see price has filled this fair value gap it's created on 15 minutes time frame. So wait for sell. You could look for sales on gold. I'd rather sell gold than buy it. Okay, so do we have a fair value gap here? Okay, so on 5 minutes, this is the fair value gap. So you could wait for 1 hour or 15 minutes candle to close below this fair value gap before you sell. That's my take on gold. That's my take on gold. I'd rather go for sell than buy on gold. Any question? Any question? Is there any other pair you want me to analyze? Let me know. Okay, let's look at GJ. That will be the last instrument for today. GBP, JPY. GBPJPY is still bearish. So I'm still making good profit on GBPJPY. That's good. Still making good profit on GBPJPY. But it's not the right time to sell GBPJPY. It's not the right time. Don't jump in and start selling. It's not the right time. Okay, so GJ might sweep all these lows, yeah. That could be what it's aiming for. Okay, these lows, probably it will come and sweep the liquidity residing. Okay. I shared this with my students yesterday. I told them yesterday candle, as you can see, closed as a spinning top after sweeping liquidity, and I told them expect sales on GJ today. You can see liquidity got swept, and we had a bearish reversal pattern on the daily, and also for I told them yesterday. You can see the pattern we had on 4-hour. We had an hanging man and a bullish hanging man, and the next candlestick closed bearish. And after the formation of this pattern, a fair value gap was created. Price had to pull back to fill that fair value gap. Let's see it on 1 hour. So you can see we had the fair value gap here on 1 hour time frame. You can see that. That is the reason for the pullback. Can you see that? Can you see that? Price came, pulled back, filled that fair value gap. And after filling the fair value gap, you can see the pattern we had here, bearish reversal pattern. We had a doji, and we had what looks like a spinning top or a shooting star. You can see it. So this would have been the best entry. So if you have missed this move, you could have entered sell at this point. If you have missed this pullback, then I don't think it would be wise to start selling from this point. I will be closing my trade now in a few minutes. After this class, I would close my trade, because you can see, I think they filled this. Let's go down to lower time frame. I'm sure there's a fair value gap it came to fill at this point. Let's see on 15 minutes. I'm sure there's a fair value gap it came to fill at that point. So you can see we had a very tiny fair value gap here, a very tiny fair value gap. If you shine your eyes, you will see the fair value gap. So I believe that could be the reason for the buy. That's the reason for the pullback. That's the reason for the pullback. You can see it has filled that gap, so it could retrace from that gap. You can see it could retrace from this gap. So this won't be the right time to sell GJ. This won't be the right time to sell GJ. You have any question? Let me know. Let me know. Is there any other pair you want me to analyze? My bias for GU is bearish, EU bearish, gold bearish, GJ. I've made so much profit on GJ. Massive profit. But if I want to take any risk on GJ, I'll be looking for opportunity to buy and not to sell. If I want to take any risks today on GJ, I will be looking for buy opportunity and not sell. But I need to see my pattern, my entry patterns on the chart before I would buy GJ. Right now, it is still bearish. It is still bearish on 15 minutes. It's still bearish on 1 hour. It's still bearish on 4 hour. And it is still bearish on the daily time frame. It's still bearish on all the time frames. So, but selling at the current market price is at a very high risk. Any question? Is there any other pair you want me to analyze? Let me know in the comment section. Like I've always advised, always apply stop loss on all your trade. If you don't want to blow your funds, always use stop loss. Risk management is key. It's very important. Know the risk before you execute the trade. Know the risk before you execute the trade. Okay? Know the risk before you execute the trade. Never risk more than 2% of your capital daily. Your maximum drawdown should not exceed 2% on a daily basis. It should not exceed 2%. Your daily drawdown should not exceed 2%. So for you to blow account, if you're working with 2% daily drawdown, for you to blow your account, your capital, you'll have to lose 50 trades. That's like 50 days. 50 days. You have to trade that account 50 days. So for you to blow the account, it will take you 50 days to blow the account. If you have a good system, you sure cannot blow or lose 50 trades. You sure can't lose 50 trades. So at the end of 50 days, you'll be able to tell if your strategy is profitable. If after 50 days, your strategy is not profitable, you might have to modify, tweak some things. Okay. You also need to confirm if the challenge is risk management or psychology. So give yourself time. Don't rush the process. Give yourself time. Okay. Don't risk more than 2% on a daily basis. Don't rush the process. Trading is not a get rich quick scheme or business. Don't rush the process. Don't rush the process. Forget about what you're seeing on social media, on Instagram and TikTok. Don't live by those things you see. Okay. Any question? Any question? Do you have any question? Let me know. 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 Okay, it appears there are no questions. So I want to appreciate every one of you for your participation. Mr. Sam, Mr. William, Mr. Debayo, Mr. Isaiah, Noel. I appreciate you all for your participation. Our next session will be tomorrow. Tomorrow is Thursday by 10 a.m. And I look forward to having you in that class. Since there are no questions, we would have to end the class. Once more, I want to say a big thank you to every one of you. And I wish you all a wonderful and a profitable trading day. Bye for now.